This meeting is being recorded.
Namaste. In my last week video, I opined that market is in the oversold area and most likely to recover and to post some gains in the coming week. But still, the market did not enter into extreme oversold area. It is returning from the extreme overbought area. So, expecting higher level of profits or margins is not advisable. And I requested to exercise extreme caution while trading in the coming week. So let us verify with the movement of the Nifty and let us try to predict the market likely movement in the coming week with the help of few technical indicators as we will do. Let us verify the Nifty movement first. Here you can see on the 12th market opened being the first trading day of the previous trading week and posted gains of 106.95 points with a decreased volume as you can see here on this day when compared to previous trading week closing day volume decreased and again on 13th market posted loss of 57.95 points again with a decreased volume on 14th, market posted again loss of 66.70 points with increased volume. This is the noticeable point here. Market posted gains on 14th. 15th being holiday, being due to elections in Bombay municipality, there was no trading in the market and market was closed. And on 16th, the last trading day of the previous trading week, market posted gains of 28.75 points and there is an increase of volume in the on the last trading day. And week on week basis, if you can see, market posted 11 points gain. And I presume that what we predicted during the last trading week about the last trading week behavior before the commencement of the trading week proved to be at least to the majority extent right because there is a gain and again loss and on weekly basis the gain is very small and limited to 11 points only. Hence we proved to be right in my presumption. Maybe I don't know whether you will agree with me or not, but my presumption is it seems to be right and to some extent to the major possible extent we forecasted the behavior of the market. And for the this coming week, what could be the likely behavior? Let us try to analyze with the help of few technical indicators as we were doing. Here you can see that market on the first trading day posted smart gains and the low made on that day was lower than previous day low and market opened as you can see more or less at the same level of the previous day close and went up smartly and the close was above previous day close. But the noticeable point here is we must carefully consider the distance between the open and the low made during the year, the low being significant because it made a lower low compared to the previous trading day. From the open, the extent or the distance between the open and the low made is more than the open and high of the same day, and the high did not surpass the previous day high. That is the noticeable point here. And on the next trading day, as you can see here, on the first trading that is on 12th itself, there was a good indication after the closure of the bar that coming days are not that lucrative, as is evident from the behavior of the market on the next day. Next day, open itself is the high, as you can see. Open itself is high, and open is above the high of the previous trading day. And after open, market did not go up; it simply came down. And significant point here is though a lower low is not made compared to 12th, the close was below the previous day close. That close was near to the high. So the pertinent points we have to observe is what is the distance between the open and low, what is the distance between open and the high, and what is the distance between the high and close. These are the three vital points which will foretell many things if you carefully observe the bar itself. The next day, there is no difference between the open and high, and open itself is the high of the day. That is one of the most significant point indicating bearishness for the day. So open is equal to itself is high, and the close was below the yesterday's close. That is another significant point. And the distance between the open and the low, if you consider the distance, it is more than previous day's open and low. Present day's open and low is distance is more than previous day one. Though the no low is made, it is pertinent here and most important here is to make a note of the fact that the open itself is high and high did not surpass the previous day. I mean, surpass the open, though the high is higher than previous day. So, on what next day, what happened exactly you see here. The low is almost at the same level for the same day, almost same. You can see it very much here, and no high is made during the day, which surpassed the previous trading day high. And though the close is above the open, the distance between high and close here you can see the distance between the high and close, and the distance between the open and the high are almost same. Open and close are all are at the same level. There is practically there is a very significantly low difference between them these two. So that is another point. But on this day, market posted some volume gains, and on the last trading day also you can see similar pattern appeared, but the significant change here is there is a new high made and a new low made. This low is higher than previous day low and high is higher than previous day high, but still the close is below the open. That shows the distance between open and low is very very small, but the distance between high and close is very much over and above the previous day level. So the price has been hammered down by the traders, taking into consideration various factors for which they believe that the price is not rightly placed and the potentiality is less. So the price has been hammered down from the high of the day to again to the lower nearest to the low, very near to the low and below the open, and the distance between open and high, I mean high and close is very more than previous day, and also if you compare 2 days before. So that is a very disturbing factor. But here the noticeable point is the last trading day witnessed increased volume activity with hammering down of the price. That is one of the factors considering for the attention of the investors, which they should not forget at any cost. And when we come down to the indicators and look at the indicators, you can see that the Depot indicator is, I have already given the AFL for this. The AFL day power indicator is returning from the oversold area and still showing up, thereby indicating some uptrend is there in the offing. And when we consider other indicators, here you can see that the level of 20 this level of 25,893.2 as indicated here, 25,893.2 is a very crucial level which should be crossed by the price. And what I mean by cross is always upside cross should be by the low of the bar and downside cross should be high of the bar. That is what the I follow. For example, if I say that the price crosses that level, high may cross. There are four fields in a price: open, high, low, close. High may cross it, and still low may be below it, close may be below it, open may be below it. Technically, price have crossed the level. Still, that cross will fail, as you can check very other in on other days also. If you go backwards, you can see that only when the price cross is by the high towards lower side potentiality will be there, and price cross towards upside by the low will result in somewhat upside down movement. So the 25,893 level must be crossed by the low of the price. Then only we can assume that at least some short term uptrend will be in the offing and most likely to happen. And if you see that the modified money flow index is showing accumulation of the stock, there is increased volume trend here, and you can see the spikes, a bunch of spikes here, which is showing that money is definitely flowing into the market. And when we come to the other indicators, here all the three indicators, the price is above all the three indicators, and this indicator started moving up, yellow one. And I can see that when price crossed, as I told you, the low crossed the yellow one, here also price went up. So here also the price crossed the yellow one, and the advanced is still holding to the bottom, stating that the bottom formation is not yet completed. And here the market crossed the important level of 25,579. So we may presume that as long as the market hovers above this level of 25,579, market may remain bullish, and sliding down is having a very limited potentiality or limited scope for the downfall. So this 25,579.5 is a very important support level for the market to hold on. And as I told you, this 25,893 is an important level, resistance level for the market to move up and to post gains. And again, as you can see here, the market did not uh, enter into extreme oversold area of 25,319. Only when the market touches that level or goes below that level, we may conclude that the extreme oversold area has been reached by the market. It did not be helped so, and still as you can see, the market is yet to reach that area, but it took support where 25,684. Am I right? 25,000. 25,630. 25,630. 5 years. 25,635 area is very crucial one, and the market touches that area, and here you can see a broad bottom is there, which is indicating most likely for this upside movement. But here in this case, as you can see that this is clearly showing the downward trend. The market though went up, it is simply showing the slope is very much down. And when we come to other indicators, here also the market is yet to move down and reach the oversold area of 24,878, this red level, but still it is going up. If at all the market moves up, 26,240 is the maximum target area as of now, and moving beyond that level, in my personal opinion, is not possible. If the market moves up, it most likely to be the um, potential target area. And here, this 25,711, the market crossed this level, but as I mentioned, the low did not cross. So immediately, for the if you keep into view or take into consideration the only weekly arena, then this 25,711.7 is very important area, and you can be of the assumption that once the low for the day crosses this level, some more upside can be easily possible, 100% easily possible. But as long as the low did not cross this level, it would be better and safe to assume that mixed trend will prevail. And coming to this, still market is in the bullish zone only, did not come down and enter into long term bearish area. So the fluctuations are most likely to continue. And here you can see that the market entered into the oversold area below the lower band and trying to get back into the bands. This 25,942.7, a close above this 25,942.7 is an important one. And again, as I told you, 25,897.2 is an important area which must be crossed by the low of the price to sustain the upside movement. And the here you can see the modified momentum is showing downtrend only. It is not yet turned up and showing that the strength is there. The momentum is positive. And when we consider the trend strength indicator, here you can see the trend strength indicator. The trend strength indicator is flat. Is flat. It is actually showing a weak side, slightly weak. So we cannot say for sure that the uptrend we have seen for the last 2 days is good one or not. And in my personal opinion, this mixed trend will prevail for some more time. And taking it for granted that either there will be one side journey will be not pragmatic in my opinion. And I think it is very very pertinent and what you call it as realistic approach to adopt a cautious approach, thinking that there will be a mixed trend in the market, and there will the possibility of the market having one-sided trend in the coming week is, in my personal opinion, a remote possibility. And I request you all to exercise caution. Thank you very much.